Creating simple strategy that lasts a lifetime is more about spending quality time backtesting a profitable strategy than it is about spending money on signals purchased from platforms. And in this video, we showcase the simple strategy I used to go from $100 to $250,000 in just 6 months. The strategy makes use of indicators and analysis tools that can be used on TradingView and MetaTrader, as well as making use of 2 time frame to give us the best trading experience. This strategy is beginner-friendly and can be used in Forex, stocks, and crypto. But before we move further, don't forget to hit on the like button and subscribe to the channel, as it motivates us on the hunt for the Holy Grail. Okay traders, we are on the Euro-United States dollar. So for this strategy, we will be using 2 time frames. The 5 minutes and the 1 minute time frame. I know most of you would be wondering why we have the lines on the chart. Well, the red lines are points for our short position or bearish trades, while the green lines are the points of long positions or the bullish trades. Then for these arrows you see on the chart are points where we exit our trades. Basically what this strategy is all about is, we mark positions at 5 minutes time frame and open trades using the 1 minute time frame in order to maximize our profit. So to understand this points of marked entry on the chart, let's go ahead and add the first indicator. Now for this, we need to add Bollinger Bands to the chart. And to do that, bring up the indicator panel. Then search for the Bollinger Bands. This one right here made by TradingView, click on it to add to the chart. The Bollinger Bands are widely popular technical analysis instrument created by John Bollinger in the early 1980s. Bollinger Bands consist of a band of 3 lines which are plotted in relation to security prices. The line in the middle is usually a simple moving average set to a period of 20 days. This type of trend line and period can be changed by the trader, however a 20-day moving average is by far the most popular. The SMA then serves as a base for the upper and lower bands. The upper and lower bands are used as a way to measure volatility by observing the relationship between the bands and price. Typically the upper and lower bands are set to 2 standard deviations away from the SMA, the middle line. However, the number of standard deviations can also be adjusted by the trader. For the settings, we won't be adjusting any. The default settings is what we will be using for the strategy. Now I guess these lines on the chart is already making sense to you, as you could visually see how and why we applied it on the chart. Now for those of you that could still ask why, here is how it works. Most often, when price action breaks either the upper or lower bands of the Bollinger, price action tends to correct its wave. Therefore, we hunt for this correction on the 1 minute time frame in order to maximize our profit from the market after we have identified our position on the 5 minute time frame. So currently, this is our first example, as the line is on red, which identifies our point of short trade. As price broke above the upper Bollinger Band, as we would want to profit from price correction from this stretched price movement. Then also, notice the arrow on chart, as it also marks our point of exit. So make sure you don't skip any part of the video to fully understand how this super amazing trading hack works. Now notice we skipped this first breakout point. This is because we will be using our confirmation indicator to confirm points of possible entry and exit while using this strategy. So make sure to stick with me to the end as we reveal our confirmation indicator as well as the settings. Moving forward, we could notice we marked another long position breakout at this point, as we tend to see price break below the lower Bollinger Band. So we would be hunting for a long position entry on the 1 minute time frame, as we tend to expect price correction due to the breakout. Now this next trade would be a short position entry as price broke above the upper Bollinger Band. Now the red lines indicates our points of short entry on the 1 minute time frame, while the green lines indicates our point of long entries on lower time frame. Note that price broke below the lower band at this point, but it was not marked on the screen because our confirmation indicator prevented us from taking position at this point. Also, our confirmation indicator prevented us from taking position at this upper band breakout. Now, I know most of you would be curious on what the confirmation is. Before we reveal that with the settings, first of all, note that a valid breakout above the upper or lower Bollinger Bands is when price action crosses above or below the bands and closes above or below such band. Price wick below or above the bands is not a valid breakout. Now for the confirmation indicator, bring up the indicator panel. The confirmation indicator is no other but the top indicator on TradingView for a long time. Search for the squeeze momentum indicator. This one by Lazy Bear. This identifies the momentum of the market. Now please note that the settings that will be applied to this indicator is just for the Euro-United States dollar 5 minutes chart only. It won't work on other pairs or time frame. Go ahead and add a straight line to the indicator. Double click on it, then change the coordinates to 0.0005. Also change the color to red, and that's all for it. Go ahead and add the second band line to the chart. Double click on it and set the coordinates to -0.0005. Also change the color to green. And that's all for the settings. Now let's recap on how this strategy worked. For sell entries, first, wait till you see the squeeze close above the red line. Then while the squeeze is above this line, we would want to see the breakout above the upper band line. Remember that the squeeze needs to remain above the upper band line or the red line while we get this breakout. Looking at the chart, we see our conditions were met. This first breakout was not valid as squeeze was still below the red line. And when it crossed above the red line at the next histogram, we had price below the upper Bollinger Band. While the squeeze remained above the red line, we had a valid breakout above the upper Bollinger. At this point, we would have to mark our sell entry. Then for exit, we would have to exit trade when the squeeze closes below the red line. That's the reason why we put these arrows on the chart. Exactly the opposite is true when we hunt for buy trades. Before we go check our trade entries on the 1 minute time frame, let's mark some few more examples to help you better understand what to hunt for. Okay traders, let's now head over to our 1 minute time frame to enter the trade. If we scroll back, our first marked trade entry is at December 22nd, 2022 at 20:15. On this 1 minute time frame, we won't be using this squeeze momentum. So let's minimize it. We would only use the Bollinger Bands here. Let's head over to December 22nd, 2022 at 20:15 to locate our first trade. We see this was the red line marked on the 5 minute time frame. Since we are on the 1 minute time frame, it is basically 5 candles that made up a single candlestick on the 5 minute time frame. This means that on a real scenario, we would have been at this 5th candle on the 1 minute time frame by the time we got this signal on the 5 minutes time frame. So what we have to do is, when we have a short position to enter as indicated by the red line, we wait till we see price close below the middle Bollinger Band line. We take position at the lows of the candlestick, then stop loss at the Bollinger upper band. No level of take profit is set for this strategy. We only exit when our conditions for the arrow is met. For our first trade, we would have made 1.4 plus times our risk. Now same goes for other marked trades on chart. And this next entry was supposed to be a long position. We got our entry here. Stop loss at lower Bollinger Bands. And we would have exited the trade at this point. Then this next trade was at this point. Entry at this candlestick. Stop loss at the upper Bollinger Band. And our exit would have been at this point. And we made 0.8 what we risked. Next trade also was a short entry. And we see it was successful. So this is our first loss, as price hit our stop loss. Then next trade made little profit when we closed the trade. And this long position also made us some profit. Make sure you calculate your position size and maintain 1% risk of your account size on each trade. Apply this strategy right and scale up your capital in no time. And that's it for today's video. Don't forget to smash the like button and subscribe to the channel. Thanks for watching and see you on the next one.